Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and I'm recording episode, 316 or so. And today I have with me Steve Lekas and Joe Emison, co-founders and CEO and CTO respectively at Branch. So first of all, thank you both for joining me today. How's it going?
Thanks for having us. Going great, Tony.
Excellent. Awesome. And Branch is one of the Columbus, Ohio Insurtechs, right? There's kind of like an incredible hub of Insurtechs in Columbus. So we're recording on April 21st, and having lived in Columbus, I'm pretty sure that it's either beautiful or you've got a foot of snow on the ground. There's like no middle ground.
We're doing both this week, Tony. I think we had half inch on Monday, and it'll be 85 on Saturday.
Yeah, that's the Midwestern thing. Okay, awesome. So thank you both for joining me. We always give the guest the chance of kind of giving the elevator pitch. So whichever wants to take it, or you can take turns. What is Branch?
Yeah, thanks, Tony. Branch is a company that we started where we wanted to reintroduce some of the old concepts of insurance, where people used to sit around a table and put money in the middle, right? The pooling of small bits, so a big chunk can be taken by an unfortunate few. And we wanted it to feel like it was your money that funded claims. It didn't go nowhere, right? It went to the rest of the community. And so we've structured an insurance balance sheet, member-owned, with a for-profit manager of the cooperative. We're a public benefits corporation who also manages a 501c3. And the technological advantage we've brought to market was the first ability to instantly underwrite insurance. All we needed was name and address and you could purchase. The first ability to bundle digitally, home and auto in a single transaction, less than a minute. And the first online umbrella policy, because we knew people who owned homes who also owned cars and desired to save by bundling, also frequently needed umbrella, and eventually adding more policy products like condo and motorcycle as we speak. But that was the intent, to help people save money on insurance by structurally making it less expensive in the old way that we think about insurance in this country, through a very do-good social benefit lens on a for-profit entity.
Okay, so there's a lot there that I like. So yes, the original concept of insurance, of community pooling of funds, right? Here in the States, all the way back to Ben Franklin, literally the Philadelphia contributorship, which is still there. Okay, so I did not realize it was a public benefit corporation. So is that a B Corp?
We aren't yet a B Corp. Expect that we will be, but they've been backlogged, which is a good thing, right? A good thing that so many companies want to be B Corp certified, but yes, probably a B Corp.
So I love that. I've been asking for years, why are we not seeing more carrier B Corps? Because it just makes a lot of sense. Okay. And okay, so instantly underwritten, that's, I think, fairly common, or at least fairly common promise from the Insurtechs. But what is definitely interesting, the reason I'm very excited to have you guys on, is I don't believe we've seen a lot of personal lines multi-line from the beginning, right? We had, Lemonade do the homeowners thing. We had Hippo do the homeowners thing. We had Root do the auto thing. Metro Mile a little bit before Root, right? But I think of like myself and like your traditional insurance customer. I'm not a homeowner, but we have a car. We're well paid. We need an umbrella, right? In our case, we need renters on an auto and an umbrella. And what has kept me and my girlfriend from trying an Insurtech instead of suffering through one of the traditional carriers, and how difficult the processes are with traditional carriers, is like, I'm an insurance professional. I know I need an umbrella, and it doesn't appear that any of the Insurtechs were offering like the package. So if I'm not mistaken, are you guys the only one that's offering like the personal line package, full Insurtech?
Yeah, Tony, actually, I mean, you hit on a number of I think, really key elements. I was on a panel and sitting next to someone who also said they had instant insurance, and they followed it up by saying, and you can buy insurance same day. And so like the definition of instant, I think, is really strong in the pitch. But even within Insurtechs that you've known before Branch, what Branch needs to give you a bindable price, and we've never offered a quote. It's always firm. Every time you see it, you can buy it everywhere you see it. And in that model, with just your name and address, we will fully underwrite you with real sophistication and deliver you a bindable price, a firm offer. And then you can, what you'll see is the price for home or renters, the price for auto, and with an extra click, you can add $1 million of umbrella. And so like, this is what we believe is instant. This is also a prerequisite to be able to bring insurance to people in moments of convenience, because you can't really have the old style of application, because to bundle, right, me and my wife with an incumbent carrier, it's over 300 questions before they tell me the quote, right? And so like, how can you embed something that's that long form? And so like the instant was really important to us. That was the earliest North Star that we pitched on. And we were pretty sure we could do it. But ultimately we were able to prove it. And then that online umbrella, we knew the target we wanted to serve was the much lower churn market, right? People like you, Tony, probably don't every 6 months shop your insurance.
Mm-hmm.
And there aren't a lot of alternatives for people in that segment. But it's allowed us to do something hyper unique, incumbent or startup. It's just us.
Okay. And I'm guessing you had to build literally everything from the ground up on the technology side, basically. There was no.
No, actually, I think the key to being able to do anything like this successfully is to identify where you're going to be differentiated, identify where you're not, you don't need to be differentiated, and then leverage as much existing tech as possible. I also think there's a really challenging problem in software development and tech companies today, which is that you hire a bunch of people who take pride in building stuff. And so oftentimes what's motivating them and how they're making decisions is orthogonal to the organization's ultimate goal. But no one gets enough clarity to realize that. And I think you can see a lot of organizations that have more than 10 times as many software developers as Branch does, that sell only one line of insurance in basically as many states as Branch does. Branch is selling, in most states, 4 lines of insurance: home, auto, renters, and umbrella. Launched it faster, and again, in a lot of cases, like 1/10 the number of software developers. And a huge part of that is just identifying this is what makes us different. What does make Branch different is certainly the purchase experience. You go to branch.com, you put in your name and address, you get that bindable price, you can buy it. You really just have to put in your credit card or your bank account to pay for the auto, and your email address and phone number, and you can bind. That entire experience we built. We're differentiated in that purchase experience. We're also differentiated in letting you buy all of those policies in a single transaction. So there's no other insurer, certainly in the US, that would let you buy home, auto, and umbrella as just one click, one transaction. And if let's say you're paying for both of them on the same credit card, just same credit card, put it in once, be done. But we do. And so that interaction, the way that works and the data structure underneath it, we had to build all of that. But we heavily leverage, for example, Clarion Door for rating and forms. It's fantastic. We don't need to build our own rater from scratch. I mean, the way we rate insurance and what we need from it and from our rate order of calculation is very similar to what other insurers would want from their rate order of calculation. You know, we're all subject to the same regulations and we all get reviewed in the same way by the same examiners. And so the idea that somehow we would need to differentiate in our insurance rater just doesn't make any sense. But I think we may be the only insurance startup not to build our own rater.
Interesting. Okay. And what's distribution? Well, no, before that, how's the rollout? Are we at like 15 states now, or
we're in 26.
20? Okay, 26 states, all 4 products.
No, in some cases we are just with home and auto and umbrella. In some cases, just home, auto, and renters. So yeah, it varies state to state.
And are we looking at 48 states or 50 states, 2024, 2025 kind of thing?
Tony, it's not entirely within our control to choose, but the effort's expended. And so,
Okay.
you know, as we work through that with the state regulators, that'll finish out. I expect.
But Tony said 2024, 2025, and that's.
Yeah, I would expect it's 2023.
Oh, okay.
You know,
So awesome.
it's yeah, you know, we structured, this is my second time doing a rapid rollout of a program. And I think this will be the fastest national rollout in P&C history since, at least personal lines that are more heavily regulated since state regulation existed. But, you know, it's really difficult. It's not only difficult because of the careful hands that you need to get these products right? Because that first foot forward is so important from an underwriting perspective, but also, you know, as aligned as we are with our members, with our customers, you know, the departments still have to look at us like an insurance company, and depending on the regulator, some of them welcome the competition and some of them are looking to see what the ulterior motive is. And so, like, you know, that's my way of articulating the difference in speed to market state by state. It has much to do with the philosophy of the department.
Okay. What's the distribution model? Is it only direct?
It's not.
Okay.
It's not, Tony. The way we thought about it is, we would like to bring our insurance products, delightfully easy, member-oriented, us facilitating the community's capital to every moment where insurance was or could be distributed. But the economic side of that is that only makes sense if you can charge the appropriate acquisition cost within the policy premium, right? You know this from all of your experience. And so one of the things that we embarked on was, would we be differentiated in an omni-channel world, right? It sounds very glamorous and attractive, but we came after it from a very disciplined approach of, well, the world doesn't need another independent agency insurance company unless it does something uniquely good for independent agents. And you can't bring a direct price point into an agency model, or else you won't have enough capital to cover commissions. And so we had to get both the regulated product right and get deep with the each of the channels go to market to ensure that we had something that made sense. And I like to think of a really unique advantage in direct to consumer in that, you know, we buy one lead, we sell 2 or 3 products, right? So there's an expense arbitrage our members can benefit from. In agency, you know, typically it's that 45 minutes of questions and answers in the application process, and agents would way rather be advising on coverage before the consumer fatigues out, or building relationship, or working throughput. And so then, you know, we also distribute through what we call our partner model, which I think the buzzier 2022 word is embedded. But we had brought Rocket Mortgage into our earliest investment round. And for years, I'd been trying to help other industries getting into insurance in my prior insurance lives or as a vendor to the industry. And, my observation was it presented this wild opportunity, not just for lead gen, which I think is how everyone is focused around embedding insurance, but instead to create a much more efficient product for the consumer, right? I mean, and I think of efficiency, like you would actually rather have the highest possible loss ratio, indicating that there was less fat while profit remained constant. And if those things were true, then embedded made a lot of sense. I've got a blog out there called Insurance Batteries Are Not Included. And so in this ideology, if you had to buy a car, you're not allowed to drive it until you have the insurance, right? Imagine if you had to buy a car and it came with no steering wheel. Well, same outcome, you still can't drive it. But if it didn't come with the steering wheel embedded in the product, then I would bet you that you would see commercials during the Super Bowl consistently that showed you different colors, steering wheels, different shape, sizes, weights, textures, those that vibrated and gave you feedback, like all these features. But because of that ad spend, you would bear the cost of it in order to do the thing you wanted to do, which was to drive your car. Mm-hmm. And for a lot of good reasons, that's how we distribute today. After the fact. And we saw an opportunity when Joe and I were at that founding moment to change the structure so that insurance could again be more efficient, like it was when people were commonly sitting around a table, that also had greater accountability to it, but also it had the inefficiency of a lack of scale, but the great efficiency of distribution.
Okay. And the insurance product itself, I'm guessing it's built on an ISO form, and no,
it's not. It's actually built on some of the more consistently profitable big insurers forms. And so, our insurance product has, it's at the top of the market as far as rating segmentation sophistication. It also has a unique but well litigated set of forms behind it. And then we have modified things that are controlled experiments, right? I mean, if you've ever been in rate making in insurance, data is the target, right? I mean, the data, the claims data is the target for predictive modeling, right? And so what we've done, not having data definitionally as a startup, is we've leveraged more public rating IP and underwriting. And then we've layered on things that were aligning in incentive to our customers. We have a structure where a consumer can take the community pledge that says, I'm Steve and I'm not going to defraud the community's pooled capital. And you can take a selfie holding your driver's license and then expose that pledge to your friends and family. If your friends and family are also branch members, they can vouch for you. And if they say, yeah, I know Steve, and yeah, he's not a fraudster, then your price decreases for each new reference point that we triangulate within the membership. And this is that old idea again, when the three of us were sitting around a table putting money in the middle, I was happy to have Tony clear off the table when his barn burned down, because I knew someday that might be me. And like, that was the community helping the community. But the accountability for Tony to take the money off the table, like, you better believe that he needed that money. And we try to reinstitute some of those through the insurance product and through technology that creates new data assets that we can use to segment risk and fraud. But most importantly, reteaches the market that this is post the era of big brand advertising. When you're someone's good neighbor or in someone's good hands, the product always worked as a community of people pooling capital. And it's not Branch's capital. We make the same amount of money whether or not we paid it all in claims or none of it. And we use a unique product, regulated product, not just tech, to reinforce those old structures that can support our underwriting and our experience outcome on a long-term basis.
Okay. So since it's owned by the members, is there a, I'm guessing hasn't happened yet because right, it's fairly early on, but is the idea a dividend if there's profits?
It is. You know, we're a reciprocal exchange for all of the insurance nerds listening to the podcast. We have a particularly unique dividending structure where our members vest in the dividends, like owners. If you ever received employee stock options, it works very similarly. And so you'll have an app interaction that says you've just been granted a dividend as an owner of the exchange. How do you want this 20%? And you'll also see that there's 80% that's unvested. And if you defect, that money goes back to the pool, back to the community. But if you stay, then the dividends continue to aggregate, and there becomes something in the middle that you can apply to your next premium payment. You can apply to your deductible if you have one to pay. You can donate to Safety Nest, our 501c3. And in this model, we continue to reinforce that this is your capital, and that we're there to most efficiently facilitate it on the community's behalf for the long haul.
Okay, and it's a 4 or 5 year vest schedule.
It's a 4-year vesting schedule.
So very much like an employee stock program. Very, very interesting.
Tony, that was it. We wanted you to feel like, I was sitting in my dentist hygienist chair a month ago. It was not a pleasant day, but my dental hygienist was complaining about a claim that she had, and her company was a mutual. And I said, well, did you call? It's your money. And like, she had no sense of this. I mean, we ended up talking, with me with my mouth open, talking about this for some time. But like, this is part of how it was intended to work, right? Small bits in, big chunks out. And there is an alignment around, it's your money, not my money. I'm not choosing to give it to you. I'm fiduciarily responsible to reapportion it out according to our contract that we all share. And in that, it's very fair, but it's also your money. And if you take too much out, other people will have to chip in on your behalf. These are really old concepts, right? We're just trying to reintroduce them in a more transparent and tech-enabled way.
Yeah, no, I agree completely. Back when I was at Nationwide, I read both the books about Nationwide.
Vice President in Charge of Revolution,
and On Your Side. Yeah, and one of those I think is On Your Side talks about. By the way, I'm impressed with your insurance book knowledge, since I don't believe that you're a former Nationwider. So yeah, that is impressive. I've got to say, you're the only non-former Nationwider who's ever mentioned that name. Like serious street cred for this listenership. So right at the beginning, everybody knew everybody, right? It was all the Ohio farmers insuring their friends, basically. And so the expenses were super low. And then by the time I'm reading it, I'm like, what happened, right? But you get large, and it's hard to keep that. And then Lemonade had some attempt at something like this by using Dan Ariely's ideas and by the charity thing, but I don't know, right? And then they went public too fast, in my opinion, and it's been difficult. But I really like the approach that you guys are taking to it, the whole hold your license thing and see how many members vouch for you, and it actually affects your pricing. That's fascinating. I kind of really want to see a Matteo Carbone like deep dive into you guys' numbers a few years from now to see how much effect that's had, because that's super interesting way to apply that idea of friends insuring friends, so that we're all one community in a technological way. So love that. Tell me about Safety Nest.
Yeah, Tony, Safety Nest is a 501c3 that's chartered to combat the problem of financial exclusion being uninsurance. And it's been a really interesting challenge that we've faced as we've been building up. But the way we thought about it at the beginning was we wanted to make an impact. You mentioned earlier, we were talking and you talked about Ben Franklin and the beginnings of insurance in this country. Branch is named for that moment when the Phillies stopped underwriting homes with trees in front of it. The first ineligibility in my historic record in the United States. And then the Green Tree Mutual, the mutual assurance company, sprouted up. No
to insure
pun.
homes that had trees. Yeah,
exactly. And they had the first rating differential, right? And so like I love there's so much in underwriting that's in that moment. But Safety Nest then, like if insurance has to be exclusionary, right? Back to like the very beginning, as I mentioned, that then that's good, right? There's a health to an insurance community that that underwriters provide. But as a society, we have created punitive measures for those that are unwilling to be insured that still want to participate societally. But what that ends up causing is a higher rate of moving violations, of fines, of license suspensions, of jail time, of job loss, wage loss. And this is all without having an accident, right? But they still have, uninsured people still have accidents driving, like at a similar frequency or so as the rest of us. And so if that's the case, then we've got 40 million Americans driving uninsured every day that the insured population pays for. You'd think there would be tremendous alignment about helping solve the poverty cycle of someone who lives this close to the edge, does not have the protection that you and I take for granted and get to complain about, having to pay for insurance. And instead, it's a method for a positive life trajectory that then falls off that cliff, right? That uncertainty manifests certainly with enough time exposed. And so Safety Nest's intent is to eliminate that problem. And the challenge is tracing it back to figure out what the root causes are. It is not as obvious as you would expect. At least Joe and I would argue, having been at this for 4 years, our original belief was, well, it's just too expensive. And so as Branch lowers the cost structurally, it lowers the bar for inclusion, and Safety Nest can pull people back above the line. It's way more layered than that. And that's what we do at Safety Nest. It's a labor of love, but we believe we can have a massive impact to society as we bring light to this problem that no one's focused on, and then help bring more people into the safety that insurance provides.
Awesome. So we're running a little long. So we'll try to get through this quickly, but when you guys appeared in the yellow book road with Lamparelli, my favorite part of that episode, and I'll link it so that the listeners can listen to the whole thing. But my favorite part was the talk about starting the homeowners and the auto departments at the same time and the benefits of that. So I was wondering if you could kind of quickly hit on that, on the benefit of doing them at the same time, as opposed to let's do homeowners and then figure out the auto piece. Or
Yeah, I mean, I think we each probably have slightly different perspectives on this, coming from, I have only done startup essentially, and Steve, prior to Branch, was in very large companies. But certainly what I saw in startup, it has been that you give someone a responsibility, and if you bring something on later, it's an add-on. And so one of the things that seemed very obvious from the beginning, and I learned this from starting BuildFacts and selling into large insurers, is that you just have the sides of the business just don't talk to each other, right? And so you have the case where like home acquisition and auto acquisition are completely separate budgets. So even though you might be pursuing the same customer who you're trying to get to bundle, you've actually burdened both of those policies with separate acquisition expense, right? And there is no way to align those executives or their executive bonuses to march in tandem. And so what's wonderful about at Branch having, and it's a wonderful thing to be someone in insurance product at Branch, to be able to work just across, there aren't factions, you get to work across all of these lines, is that you get to think about, this is what's best for Branch. This is what's best for the members of Branch, as opposed to, well, all we can do is optimize, how much auto we sell. And I know Steve had probably has some interesting things to add from being at Esurance when he started the homeowners product there.
Well, the only thing I'd add, Joe and Tony, to your question is that this is the way consumers need to shop. And the reason we do it the way Joe just laid out, and it's amazing, separate systems, separate teams, separate P&L, separate executives, separate goals, separate comp. The consumer, people who own homes who also own cars can do two things to save money. And the biggest one is they can bundle. And this harkens back to the beginning of homeowners, where we used to have 4 or 5 policies. And instead, homeowners was this wonderful innovation where you bought a single product, simplified the way a consumer had to think about buying it, but made it significantly cheaper for not having a standalone expense load on every one of those products. And, bundling home and auto, it works similarly in that way, that that if you understood consumer shopping preferences in the space, that you'd know that, people who own homes and own cars tend to bundle about 80% of the time. And so how could you would have to not know the market today to build just one product, right? And sure, it's downscoped and it's less complex, but there's a level of do you know the space? And we all as tech talk about getting really close to customers, but from my perspective, I couldn't think of doing it another way. The bar for us was, could we make it all instant? And that was hard, right? But with that in hand, State Farm didn't have to, because in 1921, they were building for a market that wasn't so connected. Right, the auto industry was still nascent, and so they were able to build just for farmers who had cars on the farm. But today, we've been advertising bundle and save for 65 years now, and Geico fills up my Pandora with it, and they don't even underwrite their own home, and so you can't get the same bundled savings on the home than the auto. There just wasn't anyone in the space. So for my perspective, this was table stakes for the future.
When I listened to that episode, and I'm probably a better interviewer than me, but when I listened to that episode, my thinking was very much this is so obvious. Like of course you should have both products at the same time. And I've been wondering since then, why didn't the and I won't mention my name, but the other full stack Insurtech carriers, why didn't they go for both products? And you're probably right. Like they just did not understand the space, right? There were tech people.
Well, I think one of the things that when you buy, when you go to branch.com and try the flow, I think one of the things you think about if you're an insurance professional is sort of, how do they do that? How is that even possible? Like they must not use a lot of data. Well, you can look at our filings. We use sort of more data than anybody else. And so there's a lot of questions of like, what even is happening? Like, how does this work financially? All of these questions, and just knowing, I mean, we've had a lot of industries that were disruptable by, here's a tech person who really understands software and internet marketing, and they don't need to understand this industry because industries are simple. There's just not a lot of work you have to do in them. Just go find,
the cost of goods sold when you sell it. That's the thing with insurance. We don't know the cost of goods sold.
And it's heavily regulated and it's state by state. Right. Yeah. And so I think what happens is you say, I want to do instant, I want to do name and address to bindable price, but you hire an industry expert or a consultant and they say, well, no, you got to do it this way. And if you don't know, for example, to say, well, let's not ask people if they smoke, because like, how much of a price difference is that anyway? And do you even get accurate answers? Like, aren't you just asking, are you an honest person who smokes? I think if you just work with straight consultants, or you just hire sort of, here's somebody I found who seems to have some industry expertise, that person probably says, nah, I wouldn't mess with it. The department's gonna have a problem. It's gonna be more different from the underlying program. But if you know what you're doing in the space, you say, no, we're gonna get rid of it. The department's gonna be okay with it. We can justify this and like make the change, like get rid of the question. It's a bad question. There's a real difference. Now imagine repeating that over 1,000 different decisions that are necessary to go instant. And now imagine doing it at the beginning when you first file your program, as opposed to several years later, realizing, oh boy, I'm kind of fenced in now by everything I've done before. And then there are 50 states.
Yes, which is incredibly tricky. So we've gone super long, but I always wonder where the idea came from, and I'm guessing, Steve, given that you were the one with significant insurance experience, I'm guessing it was you. So you spent a good amount of time at Allstate, growing from literally first notice of loss rep. By the way, I started as a first notice of loss rep too, all the way to a product director. Then you went to insurance, which was part of Allstate. So. And then Verisk ISO. So carrier, startup carrier, Verisk ISO. So how did it all come together? And you're like, we need a whole new technology first carrier to do this better.
Tony, it started when I was, in my formative insurance years at Allstate, and recognizing that Allstate wasn't growing, and on a long-term basis had grown through premium growth, but not through customer growth. And I had been very frustrated with that fact, and trying to figure out where we had gained our market share, because Allstate was and is very big. But I didn't get any good answers to the question. Everyone seemed to be dead that knew why we had been really special once. And so Allstate sent me to Esurance to build the first online home insurance business in the United States. And, I got there not, being in an insurance company, very functionalized, but curious. And then having all the responsibility to define everything. Like, I learned so much, a very unique skill set with the protection and safety of the big balance sheet. And when I got to Verisk, I saw in the economics of data, with my understanding of rate making, a way to think entirely differently about how we brought insurance to consumers. And I felt like that was important. But along the way, I'd been obsessed with how did big insurance companies become big, which is why I've read the founding books, every one of them that I've been able to read. And what I found is that in personal P&C, there was only one story of how to win market share. And the story was you had a less expensive similar product for a big portion of the marketplace. Consumers have been price sensitive since pre-actuaries. And like the stories go back that far on how people have won because they were right in the lower price they had. And so like I felt like at this point I had a recipe. And my baggage was that people thought insurance was necessary. Evil was the term I most frequently got, but evil was always the chord that it struck for me. And like, I felt like we could bring something into the market that would acknowledge both the sins of our past, but the noble elements of it that could do good, and most most tangibly defined as by making insurance less expensive. And then through this weaponry of instant, we got to define and design an entirely new way to think about bringing insurance to market for that end. And the mission you can get any brancher to articulate is branches designed to make insurance less expensive so more people can be insured. And our brand then ends the narrative in branches getting back, that historic reference, to getting each other's backs, the thing you should expect from the group facilitating your capital. When you need us, we're there. And so like this do well by doing good model with a less expensive product at a profitable, rate adequate price point, because of new business models being cheaper. I believed if we could do that, right? And insurance is this ecosystem business of you can't be bad at anything, and it's ultra complex and there's so many variables that can go wrong. We bid off a lot at the beginning to fulfill that thing that was then differentiated enough to grow fast and while making a targeted underwriting outcome. And so like, if you want to do something really good, it's probably hard. And we've done a lot of things the hard way so that we could build for a very long term. But that was the founding moment. At that point, like the more real moment is at that point I couldn't sleep. I started penning out a business plan, which we've been amazingly on target for the numbers I penned out before we got to market. And then I had to sell my pregnant wife on quitting my job and starting from scratch. And so like it's been, I tell people that startup, as romantic as it seems, is this wonderful, rewarding place where you can both win the lottery and then get punched in the stomach within like the same 30-minute period. Like the highs and lows are so high and low, but the chance for impact so worth it, and wouldn't trade it for anything. And that's how we got here.
It's beautiful. It really is. But thank you so much. Before we close, so in the early years of Profiles in Risk, when Lamparelli ran it, he used to play a game at the very end where he asked quiz questions, and often it was the guest and me, and see who got them right. So we haven't done that for years, but given your level of insurance nerdiness, which is truly amazing, I'm just, so you mentioned the year that State Farm was founded, 1921. Do you remember the book, the State Farm book? What is the title of that book?
A Farmer from Myrna.
Farmer from Myrna. That is absolutely correct. What about the USAA founding book?
I haven't seen it, but I have heard that Wayne Peacock has a copy of the original business plan. Do you have a copy of the USA book?
I have a copy of the USA book, A Legacy of Service. And it's sizable. I have not read it. It's a good like 500 pages. I think I read the first couple of chapters.
Awesome.
But yes, good job on the Farmer from Myrna. Fantastic. And finally, as a former All-Stater, who owned Allstate at the beginning?
It was Sears. I have a copy of the 1932 and 1931 catalogs here. And May 1931 is when when I was at Allstate, we claimed that we sold the first policy. Interestingly, Allstate's not in the spring catalog, the Sears spring catalog, but it's beautifully done in the 32 edition. You've got a black and white catalog that's this thick. If you can't see my hands, like 2.5 inches thick. It's like newspaper, thin paper, everything's black and white until you get to the Allstate line of auto products. The tire was the most famous. And then it's a two full page color spread of Allstate insurance as it introduces. And the application is name, address, year, make, model, coupon clip, you send it in, you get a deck page back, save 40% on average.
That is fantastic. So did you literally go on eBay to find the copy of the catalog, or?
I did. I bought multiple copies. As I told you, I was a little obsessed with this question.
No, I love this. I loved it. Absolutely love this. I've kept you guys a little long. My apologies for that,
Yeah.
but it's been really fantastic. Steve, one last question. Any other insurance book, with the exception of Against the Gods, because too many guests have mentioned that one. Any other insurance book that you recommend for anybody else that's new in our industry?
The two that I would totally recommend, but depends on your ability to ingest dry information. But one is called The History of the Board of Fire Underwriters, the Board of Fire Underwriters. I think that's right. It's from the 1800s, and but you can find it free on Google Books. This is actually like the founding moment of the industry as we think about it today. Like the original bureau, this caused building codes to happen. This caused underwriters' laboratories to exist. I mean, like such a diaspora of how we came to be who we are. The other one that's like a really neat book is called Invisible Bankers from the 70s.
I have it in my collection. I haven't read it.
It's like, imagine someone as passionate about the good insurance can do, being as passionate cynically of what insurance is, but like for a balanced approach. And it's really, fun to read. I thought it was really fun to read. I highly recommend those two.
Thank you both for your time. This has been really fantastic. I will tag you both on LinkedIn when it goes live. And I'll include the website for Branch. I'm glad somebody's doing what you're doing. Quite honestly, I'm very glad somebody's doing what you're doing. I don't know if you do the renters. I didn't ask, but you do.
Yeah, what state are you in?
Georgia, Atlanta, Georgia.
All right, so
Not yet.
Not yet, but
Okay.
should be this year. I can't remember if
we have a COA. We don't have approval for the program.
But I don't know if that we'll have renters there. That'll be the question. But
we will. It just might not be as early.
Oh yeah. It might not be this year. Yeah.
So,
but anyway.
So what about telematic or by the mile for the car?
We have a telematics program. There's a participation discount, and that you can get a discount if you score high enough. We are increasingly adding like mileage into ratings, but not selling insurance by the mile at this point in time.
Okay, perfect. I will definitely be getting a quote when it gets to Georgia. We are both remote, right? We both work from home. We don't have kids. Like we have a 2012 Prius that's paid off and is getting like 1,000 miles a year, and my insurance is still the same insurance that I used to have when I was commuting 25 miles a day, right? Part of it is because it's so painful to quote. So I will, and because I want to keep them together. So yes, I will definitely quote with Brej. I'll probably post on LinkedIn about it what I do.
Please do. Please do.
So thank you very much for building this.
Thanks, Tony.
And for coming to the show.
It's been really hard. I'll say, loving it, but it's nothing comes easy, and we're gonna take a little while to perfect everything, but it's going really well. And appreciate you giving us the airtime and the highlight.
Thank you.
Thanks so much. Good to meet you.
Thanks.